All right, good morning, everyone. It is 8:42 on the morning of December 28th, 2022, and this is my pre-market strategy session. So today, including today, there are three more trading days left in the year. And now, I imagine that it's gonna be a fairly quiet week. However, the week between Christmas and New Year's is typically a heavily traded market, meaning really the only people involved in the markets right now are traders. Everybody else, the industry leaders, the hedge fund managers, the so on and so on, they're all on vacation. Everybody that's left are pretty much the sort of junior managers, junior portfolio managers, and the kind of the new blood and the hardcore traders. That's pretty much everybody else is on Christmas vacation and New Year's vacation right now, and so all of the what we could call kind of institutional money is kind of just sitting tight. So there can be some movement in this week, and it actually 58% of the time, the between the 25th of December and the 31st of December, there's a 58% probability that it will be a red week. Okay, so statistically speaking, the stats are in the downside favor, in the favor to the downside. Well, there's something else going on. There's always more than one thing going on. So actually, let me get the volume out of the way here so we can see a little bit more clearly. And I'm actually let's find where this line is. Where is this line? No, not that one. Where the trend line? There it is. So let's take a look here real quick. Here's this low that was put on in the 13th of October. I'm going to connect that to the next nearest low. So we have a little bit of a breakdown of a wedge pattern here. Almost a wedge pattern. It's not a perfect, picture perfect wedge pattern, but it is a wedge pattern. And there's no reason for this to, there's every reason for it to continue to the downside, given that we're in a bear market. The economic conditions that we're staring into are to the downside, so on and so on and so on. The predominant sentiment is bearish, but it is possible from a technical standpoint to put in a new higher low right here. And so we kind of are at that moment right now. Does the market find support right here and then rally possibly up to this resistance line, support and resistance line? Or I'm going to get rid of these two lines. These were the gap. This is the gap that I was watching for a long time, and it's underneath the gap, which is in itself bearish. The next level to watch here is right here at 259.08, and then the next level after that is 255.16. So there's no doubt in my mind that if we head beneath this 255.16, that we are, then due and are looking at new lower lows for the year, for the previous 12 months, certainly. And it's always entirely possible that we put in a low right here, find support, and then rally for a little bit. And I know I haven't done the statistics on the first trading day of the year. However, it tends to be bullish in my experience. This is completely empirical. I haven't done any actual statistical analysis for January, the first trading day of the year. which, let's see, the first trading day of the year this year will be the 2nd of January. And it's just been my experience that the first day of the year is bullish. It could be completely different this year, obviously. So it is breaking down. The trend is bearish. The high probability trade will be in the bearish direction. And so, yeah, I wouldn't be surprised if we dip down to 259 right here. I wouldn't be surprised to see some support right there. And then also, I mean, you know, I wouldn't be surprised to see it rally back up above the previous day's open right here at 266.74. So I'll probably only trade the morning session, and so if in the morning time here we get a break, if we open, suppose we opened right here this morning. Suppose, you know, there's another 45 minutes roughly until the market open. But if it opens and then dips down and comes back up through its open, then there's going to be a bullish trade there. If it opens up and comes back down through its open, there's going to be a bearish trade there, just for a quick trade. That's pretty much what I'm looking for this morning. VIX is still above 20. That's bearish. You really want to see the VIX breaking down into the teens before you start getting to the bullish side. The 10-year, 2-year is tightening up a little bit, still quite negative. It went as low as, I mean, almost 900 basis points to the, you know, inverted there. And this is the monthly chart, and of course this in yield curve inversion can last, you know, historically speaking, here in these past 3 inversions, is anywhere between a year and 18 months. And it's not until we break back up above the 0 line here, this pink line is the 0 line. And that's once the yield curve starts to normalize again, we start to see the big crash in the market. So if history is any indicator, we're due for some kind of major downturn after this yield curve normalizes. The markets can remain bullish, or can be bullish as the yield curve inverts, or as the yield curve is inverted. Right now, I mean, we've already seen more than a year of bear market activity. So if we get a crash once that yield curve starts to normalize again, I mean, we're headed quite lower. I think I have a Fibonacci right here. Check out this Fibonacci. This Fibonacci goes all the way back. Let me put it on the monthly. This Fibonacci goes way back to 2002, and the progress that we've made since then. I mean, you can see it's going parabolic, right? So if we're due for like an incredibly large crash, I mean, we're looking at some pretty low prices. If if history's any indicator, in the next, I don't know, couple, 2, 3, 5 years, this could go on for a long time. This could be a sustained downturn. So Bitcoin is back up above its support and resistance line here. I think this is short term. It's only a matter of a few days or a few weeks until we get down here to this 13,000 support area. All right, everybody, that's my pre-market trading session, pre-market strategy session. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell. I'll see you at tomorrow morning's strategy session. I am out.